from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Welcome to Bloomberg Technology. I'm Emily Chang, live from Seattle. Coming up in the next hour, Meta's results. Its big bet on the metaverse in question. Can the tech giant prove AR and VR can be a meta moneymaker? Shares plummet on fourth quarter results. We will discuss. Plus, AMD shares spike on the back of strong earnings. I'll speak with AMD CEO Lisa Su about how she's doing it amidst the continuing supply crunch. And MicroStrategy takes an almost $150 million charge, writing down its Bitcoin holdings, this on new accounting rules from the SEC. Still, Michael Saylor's firm buying more Bitcoin. We'll ask him why later this hour. All of that in just a moment, but first we're taking a look at the markets. Our Ed Ludlow here, watching Meta, watching Spotify. Ed, take it away.
Yeah, I mean, look, markets are now refocused on earnings season. Just in terms of where we ended Wednesday, the NASDAQ 100 up 0.8%, fourth gain in a row, best run of winning streak since November of 2020. And you talked well about AMD, real strength in semiconductors. Semiconductors like AMD and boosting not just the Philadelphia Semiconductor Index, but the NASDAQ 100 as well on that strength that we got from Alphabet earnings. If there was one area where we didn't carry on momentum, it was in cryptocurrencies. The Bloomberg Galaxy Crypto Index, it's that basket of tokens that Bloomberg tracks, largely weighted towards Bitcoin and Ethereum, down 2.9% on Wednesday. But let's talk about those after-hours movers, because, my goodness, it has been a stressful last hour, Emily. Let me tell you. Qualcomm starts rising in after hours after a really bullish second quarter outlook. Smartphone demand really strong, but now we're down 2%. We have been down as much as 8% in after hours. A lot of this seems to be those other bets. You know this story, right, Em? Cristiano Amon trying to move the company away from smartphones to new areas like automotive, IoT. Really lofty expectations from the street. They seem to have missed those, and the street selling as a result. Spotify down 10%. The numbers not great, to be honest with you. They ended the first quarter with 418 million total users, 183 million subscribers paid. That sounds really good when you say it out loud, but it was less than the street was looking for. Let's get to the big one. Meta, the parent company of Facebook. Don't rub your eyes, Em. That is what you're seeing. We're down 21%, 22% in after hours. Monthly active users, daily active users, soft, below estimates. The company being pretty candid. Headwinds from competitors. Are we that surprised? How many analysts cut price targets on Meta in the last few weeks because of competition from TikTok and video? They see progress in these other business areas, but clearly something is not going right or something's going wrong at Meta.
Ed, I would say it is a surprise. I can't remember a time when Facebook's core users didn't grow. Thanks so much for that report, Ed. I want to bring in Deborah Aho-Williamson now from Insider Intelligence. Deb, can you remember the last time that happened? Has it ever happened?
I was just about to say, Emily, for the first time that I can recall, yes, this is a new information. Facebook lost daily active users in Q4 on a worldwide basis. And, you know, the monthly user base gain, not that great. It's having challenges with flatness in Asia Pacific, which is historically where it's seen some of its largest gains. These are things that we weren't necessarily surprised by at Insider Intelligence, but I think the fact that here they are in bald-faced numbers is what is causing all of this chaos that's going right now, in the after hours. Not to mention, of course, the questions about the metaverse, the ad revenue performance, which looked good for 2021, according to our estimates and our forecasts, but the guidance for Q1 lower than expected. It's quite a lot to unpack, and a lot of unsettling things going on right now with Meta.
Absolutely, Deborah. We've been talking about this for years, anecdotally, but seeing it in the numbers is a different thing. Why do you think this is happening? I mean, are we talking about teens and young adults just thinking Facebook isn't cool anymore?
It's a lot of things, right? So there's going to be a natural ceiling for a platform like Facebook to be relevant, and not only in the United States, where you're right, teens and young adults are generally not using the platform very often, but outside of the U.S. I mean, we tend to be very U.S. focused in a lot of the things that you think about with Facebook, the platform, but they are a huge worldwide platform as well. And like I mentioned, Asia Pacific, source of a huge amount of growth. Developing markets, previously, source of a huge amount of growth on an annual basis. Those things just aren't happening anymore. And we're not forecasting much gains, if at all, in total Facebook users for this year.
And also on the advertising front, you've got not just fewer people on Facebook, but you've got Apple cracking down on targeted advertising. I mean, what is the long-term impact of that going to be, especially as Facebook is trying to make this big pivot to the metaverse, which could take years to pay off if it pays off?
Yeah, so much to think about. Looking first at the short term, again, Facebook's full year worldwide ad revenue came in right almost exactly where our forecasters expected it would be. Kudos to our forecasters at $114 billion. So that is okay. I mean, I don't think anybody would really think twice about a revenue performance like that. I think that what people should be concerned about is what Facebook said is ahead of it. It's acknowledging increased competition for time and engagement among its users, which then trickles down to advertisers. It's acknowledging the headwinds from Apple from the iOS changes that have been talked about for quarters. And it's certainly talking about huge investments in the metaverse, which we know are not going to bring any revenue or any meaningful revenue into the company anytime in the next near term, even a few years, from what I can tell.
Well, so the question is, are investors going to be willing to wait around for that? This is obviously a huge investment in the future of artificial and augmented and virtual reality, but nobody knows if that future is actually going to come to fruition.
That's a really good point. And nobody knows if the metaverse is going to be someplace where people spend a lot of time gaming, or if they spend a lot of time shopping, socializing, all of the above, none of the above. I mean, there's a lot of questions surrounding all of the companies that are investing right now in the metaverse, not just Facebook, to be fair. So, Meta. I've been covering the company so long that it's taking me a while to get used to calling it Meta. But so, Meta's making certain investments. I mean, I think the logical place for Meta to lean in when it thinks about revenue from the metaverse is in advertising and commerce, right? So we're expecting experiments along these lines this year. Again, none of it's going to drive significant revenue towards the bottom line for Meta, but we're interested in seeing what is the next ad format going to be. Because if you remember when the company first launched as Facebook, it really revolutionized advertising. And the question we have is, can it revolutionize advertising again when you're thinking about the metaverse?
Listening into the earnings call now, Deborah, Mark Zuckerberg saying the popularity of TikTok is driving, the reason behind many of these investments they're making in these different products, Reels in particular. All right, Deborah Aho Williamson of Insider Intelligence, always appreciate you taking the time to join us. We'll continue to watch out for headlines from that call. Meantime, coming up, a different earnings story for AMD. The chip industry may be in a crunch, but not for Lisa Su. I'll be talking to the CEO of AMD coming up next about an earnings beat and strong outlook ahead. That's next. This is Bloomberg. Shares of chipmaker AMD spiking after strong fourth quarter results and a good outlook ahead. AMD CEO Lisa Su with me here now. Lisa, look, it was a great report. Everybody's excited about the outlook. What's driving this in terms of the execution here?
Emily, it's great to see you as always. We're very proud and excited about the quarter that we had. The 2021 ended up 68% growth and on an annual basis. Very, very good traction across all of our businesses, whether you're talking about, our data center business, our gaming business, our graphics business, our PC business, all of the businesses are really firing on all cylinders. And going into 2022, we see, very similarly a strong demand environment, as well as just a great product portfolio. So we were able to guide full year up 31%, and we're really excited to see what 2022 brings.
We're now 7 years into your tenure as CEO, and you've gone a long way to restoring AMD's position in the industry. There is this question of how much further can AMD go? How would you answer that question?
Well, the wonderful thing about technology is there is so much to do. So as proud as we are about all the progress we've made over the last few years, the technology envelope, we have to keep pushing the envelope. There's more and more to do. The applications are requiring more and more high performance computing. And this is our sweet spot. This is where we're specializing. So, I see tremendous opportunity for us going forward. And you see that in just, the strong demand environment and the fact that everybody wants more compute, whether you're a business or you're a gamer or you're an enterprise or you're a cloud manufacturer. I think more compute is one of those secular growth trends that we believe a lot in and will continue to be a key factor over the next 5+ years.
How much of what you're reporting is overall market share gain versus an industry just getting bigger and all boats rising?
Yeah, that's a great question, Emily. There's no question that, sort of the backdrop of the COVID pandemic and all of this digital transformation has been good for semiconductors. And so you can see that the overall demand environment is strong. I do think what we have at AMD is an alpha factor on top of that. We have great products. We're underrepresented in the market. We've been working for the last 5 years at building trust with some of the largest hyperscalers and the largest customers in the world so that they can trust us with what their technology needs are. And I think within that backdrop, we've been able to gain market share and really, gain the trust of some of the largest and most important brands in the world.
Now, the whole industry, of course, has struggled to get enough supply. We just heard Elon Musk say Tesla will continue to be chip limited. I spoke to Jim Farley, the CEO of Ford. He said there's no relief in sight. I'm curious about how you are executing here and managing to get in more orders and beating your targets, even against this difficult backdrop.
Well, the last 12 to 15 months has been all about really strengthening the semiconductor supply chain. And, we work very closely with all of our supply chain partners, whether you're talking about on the wafer or the front end side or the back end side and substrates and all of these testing equipments. And, what we have really planned for is long-term growth. I mean, we've had a very ambitious growth outlook for the last few years. We continue to have that. We're working with our partners. We're investing. So we're investing with our partners on building out that capacity. I think we've been very aggressive, and I'm happy with the fact that we've gotten more supply, and that's part of the reason we were able to overachieve in 2021. And, we do see, I know people say that there's no end in sight. I wouldn't exactly say that. I would say that a lot of progress is being made. And, we're thankful for all the partnership across the supply chain, and we're going to continue to drive more and more supply as we go through every quarter in 2022.
The Biden administration has been taking an active role in trying to alleviate the crisis. The president himself had this to say about his view on what's going on here. Take a quick listen to President Biden.
Everything from cars to dishwashers are delayed getting to showrooms and customers, just as demand for them is up because the economy is growing. And because supply is low, we find ourselves in a position that we're really behind the curve. Prices are going up.
Lisa, and I know you've been engaged with the Biden administration on this as well, but is there anything the government isn't doing that they should be doing or doing more of that you think would help?
I think the overall government has been very supportive of the semiconductor industry. And if you think about, probably the most important thing is really declaring the semiconductor industry, essential. And we saw that through the pandemic. We see that now through the need for semiconductors in so many different applications. And that's a tremendous statement. I think we're very supportive of the legislation that's going through now between the CHIPS Act and the Competes Act. And we view it as this is a public-private partnership. We all have a part to play, ensuring that there is a strong semiconductor ecosystem in the United States. We're happy to play our part in that. And that's not just a manufacturing statement. That's also a research and development statement. We really want the U.S. to continue our leadership in design and all of the new innovations that are necessary. So, I think we're all on the case, and we continue to be focused on not just the supply chain in the short term, which obviously is very important and we're all focused on, but really the health and the prosperity of the industry over the longer term. And I think there's a lot of good discussions and good action plans in those places as well.
Meta just reported results. You may have heard us talking earlier, a difficult quarter. We didn't see growth in Facebook for the first time that I can remember in my 10 years covering the company. What's it been like working with them now that they are a customer? Can you share any color on what you've learned?
Well, the way the way we interact with all of our large hyperscaler partners is really a long-term roadmap. And so we're talking about work with not just Meta, but really all the large hyperscalers, including Google, including Microsoft, including Amazon, and so on and so forth, about what do they need over the next 3+ years. And that's on a technology standpoint, that's from a supply standpoint, that's from a really bringing our two teams together. So that work is going really, really well. And we view this as such a strategic area. Think about data centers and cloud as secular growth over the next 5+ years. We need a lot more compute there, and we're working closely with all of our partners to ensure that we satisfy that and we help them meet their objectives.
Meantime, Lisa, I gotta ask, a man in a Christmas sweater who you might recognize as one of your competitors recently had some words about AMD. Take a quick listen to this.
All of a sudden, boom, we are back in the game. AMD in the rearview mirror and clients, and never again will they be in the windshield. We are just leading the market.
I suspect, Lisa, that you have quite a different view on the competitive position. Curious what your response is to that and how you see the competitive landscape right now.
Emily, we've been working on this journey of really building out AMD as a high-performance computing leader for the last 5 years, and we're going to do that for the next 5 years. So we're about playing our game. We feel very good about our strategy. We feel very good about our customers, and so I think we will do well in this market.
All right. Well, we'll be watching for that. AMD CEO Lisa Su, always great to have you here on the show. Thank you so much for joining us. All right. Coming up next, there's so much to talk about when it comes to Web3. But what is it really? That's next. This is Bloomberg. The tech world has been buzzing about Web3 and its possibilities, but a lot of people still don't understand what Web3 really is. We're trying to understand it too. Bloomberg Quick takes Nicole Tsai and Jiaping Huang. Take a look.
What is Web3? There's a lot of buzz surrounding Web3, but really, what is it? Honestly, it took me a while to wrap my head around it because people make it seem like it's so complicated. But at the heart of it, it's not really. Web3 is not a platform or a type of technology or something you're going to find in the metaverse. It's actually more like an era or a categorization. But before we dive deeper into this, know that all this categorization is still pretty vague because there isn't some official body out there saying, hey, this is Web3. The way people can say, hey, it's 2022. Long story short, Web3 wants to be a decentralized internet. In Web3, people wanted to take a step back from the Web2 structure where power rested in the hands of a few tech CEOs. At the foundation of Web3 is the development of blockchain. Now, blockchain is the technology behind cryptocurrencies and at its core, decentralized. So how does blockchain decentralize the internet? Usually when talking about blockchain, you hear it associated with Bitcoin and other kinds of cryptocurrencies. But, this is because, for example, Bitcoin isn't maintained by just one company, but by a vast network of computers all connected to the internet. Now that we know how Web3 can exist, the question is, why are venture capitalists throwing billions of dollars into Web3? A chunk of that money is going into the development of dApps, or dApps. Still debated on how that's said, dApps. dApps, or decentralized apps, are one of the reasons why you're seeing so much optimism around Web3. Here's my colleague Ziping Huang with more on dApps.
Thanks, Nico. So dApps run on top of blockchains like Ethereum or Solana, instead of servers run by big companies like Facebook. That means no one can actually shut them down. But what's more important is that dApp users can have the full ownership of their data, tokens, or virtual assets for real. Some of the most popular applications are in finance and gaming. For example, this app called PancakeSwap allows you to trade one coin for another without any middleman matching orders. And there's a hit game called Axie Infinity. It's just like Pokemon, but you can sell your virtual pets for money.
At the same time, Web3 also has its skeptics. Elon Musk said it seemed like a marketing buzzword back in December. Cryptographer and Signal app founder Moxie Marlinspike also discussed the issue of servers in a post discussing Web3. Unless people start running their own servers, and very few people and even organizations do this, it's not really decentralized. Accountability could also be a big issue with Web3. Regulators are raising concerns with some issues regarding decentralized finance or DeFi apps that let people lend, borrow, and trade coins with each other. They do so without verifying users' identities and performing anti-money laundering background checks. Finally, there's environmental concerns about the huge amount of computing power some blockchains require. At the end of the day, we have to ask, is Web3 really worth the hype? Or is it just a bunch of tech talk celebrated by a niche market? Let us know what you guys think.
Bloomberg's Nicole Tsai and Ziping Huang there. Meantime, I want to talk about Spider-Man coming to the aid of Sony. The Japanese Electronics and Entertainment Corporation reported strong third-quarter earnings and raised its fiscal year forecast. Credit goes to a new blockbuster Spider-Man movie, along with sales of image sensors used by Apple's iPhones. However, it wasn't all positive for the company, which said it expects sales of its PlayStation 5 to be down due to the ongoing chip shortage. And big changes at CNN. Jeff Zucker, president of the news network, has resigned after failing to disclose a romantic relationship with another senior executive. Zucker said the issue came up during an investigation into former anchor Chris Cuomo, who was fired over his involvement in helping his brother, former New York Governor Andrew Cuomo, fight sexual harassment allegations. CNN named 3 interim co-heads of the network until the company's merger with Discovery, which is expected to close by spring. Coming up, an exclusive interview with the new co-CEO of Salesforce. Brett Taylor will be with us to talk about the company's new safety cloud. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in Seattle. Getting people back to work in person and safely. That is the goal of Salesforce's new Safety Cloud. It helps businesses manage testing and health protocols as everyone navigates the return to work and in-person events. For more, I'm joined exclusively by Brett Taylor, co-CEO of Salesforce, in his first TV interview since getting that top job. Brett, great to have you with us. Talk to us about this new Safety Cloud. I understand it was based on Salesforce's own work experiences. How does it work?
Well, it's pretty simple, Emily. It's really about scaling testing, which is really the way back with all of these new variants that none of us expected or hoped for, but are a part of our reality in this pandemic, which is becoming an endemic. It enables you, if you're putting on an event like our Dreamforce San Francisco or Dreamforce New York City, or even the company kickoff we're doing in New York City next week with 5,000 of our employees, it means that you can scale testing. You can do either an at-home test or perhaps with one of our partners like CVS Pharmacies, do a test, show up with a QR code, and you know that everyone in your building or in your event's been tested, and you can have the confidence to reconnect safely, because that's what's top of mind for all of our customers right now is how can we reconnect in the face of this ever-changing endemic?
What is Salesforce's latest return to work plan and view on how workplaces in general are going to be changed forever?
Well, Emily, since the beginning of this pandemic, we've really been focused on how can we bring the power of our technology platform to help both ourselves, but more importantly, help our customers thrive in the face of all these unexpected changes. Whether it was contact tracing, like we partnered with the state of Rhode Island, or vaccine management right here in my home state of California and so many states around the United States, or now with Safety Cloud. We know that our customers want to connect with their employees and their customers digitally. They want to reconnect safely, and we're really representing that as well. We have 84 over 100 offices opened, all powered by this Safety Cloud. We're getting together 5,000 of our employees next week in New York, but day to day, we're also running our whole company on Slack, our digital headquarters. And candidly, Emily, I think that's the new normal. Most of our interactions will be digital, but we need to use the power of technology so that we can reconnect safely and reignite all of our cultures in this new normal.
Now, you've been in this role of co-CEO for 2 months now. Tell us more about your relationship with Mark Benioff in person and virtually, and how you've been working together in this top job.
Well, as you know, Emily, because you've known me for so long, Mark and I have been friends for over a decade. He's been a mentor of mine, particularly as I transitioned from consumer software to enterprise software. And when I sold my company to Salesforce about 5.5 years ago, I can't say I imagined being in this role now, but this is a lifelong partnership and something that has been really, I think, the most exciting part of my career. And operating this important company in partnership with Mark is such a privilege, particularly right now, because if you look at the past couple of years, I think this has really accelerated the digitization of the economy, and you can see the second and third order effects around the economy. And Salesforce is such an important, trusted digital advisor to all the most important brands in the world. And doing it in partnership with Mark is just the privilege of a lifetime.
Now, Salesforce made a huge tech deal last year, buying Slack, and I know that you were critical to that. I'm curious how you're thinking about M&A right now, given that we just saw Microsoft kind of up the ante buying Activision for more than twice as much. What's your view on Salesforce doing deals, how aggressive you should be, and where valuations are at?
Well, first, I'll answer your question. Let me just talk a little bit about how excited I am about Slack. It's interesting. The expectations we've developed as employees in this pandemic, I think, has really permanently shifted the way we work. We do a survey of employees who work in offices. And the last survey that we did, 76% said they want flexibility where they work. And over 90% said they want flexibility when they work. And in this competition for talent, that really means the digital headquarters we build for our employees is as important as the physical headquarters. And I'm talking, you know us, we have Salesforce Tower in San Francisco and New York. We were really under office space, but this idea of really building that digital headquarters, I think, is top of mind for every executive team all around the world. And right now we're focused on integrating Slack. So to get to the answer to your question, we're not seeing short-term M&A opportunities, though, as you know, we're always opportunistic in finding innovation in the market.
Now, the same week you were promoted to co-CEO of Salesforce, you became the chair of Twitter's board of directors. Curious how much time you're spending with Parag Agrawal, given that this is his first time being a CEO.
Yeah, so I've actually been on the Twitter board for over 5 years, and it's such a privilege to work with a new incoming CEO. And I'm really excited about Parag's leadership, excited to where he takes the company, and really excited about all the innovation coming out of the Twitter consumer product as of late.
Let's talk about that, because Twitter just pivoted to NFTs and profile pics. We see Facebook, I should say Meta, making this big pivot to the metaverse. Of course, you were the CTO of Facebook in those early years. We're seeing Microsoft throw its hat into the ring with an enterprise metaverse play. What do you think of this move to the metaverse, and will Salesforce have a role in it?
I'm really excited about all the innovation in this space. When I think about NFTs and the metaverse, I really bring it back to seeing what our customers are doing to engage with their customers. And I think it's really about all of our digital identities becoming more important than ever before. It's about building communities. It's about digital goods. It's about collectibles. And I'm seeing so many interesting experiments from retailers around NFTs and digital goods and wallets that I think are really exciting. As you saw in the segment right before I came on, there's a lot of hype in this space. Sometimes it's hard to untangle the really interesting stuff from the hype. But we're really excited about it. And I think you will see some innovation from us in this space, because we want to make sure when our customers want to experiment with this technology, the Salesforce platform is there to help them do it.
What do you mean by some innovation? Can you give us a hint?
I can't, but you'll have to wait and see. Maybe I can come back on the show and tell you about it.
All right, I'm going to hold you to that. Bret Taylor, co-CEO of Salesforce, thank you so much for joining us, and appreciate you taking the time in your first TV interview since taking that role. All right, coming up, Michael Saylor of MicroStrategy, the company taking an impairment charge, having to write down the value of its Bitcoin, but still investing, still buying more. Michael Saylor with us next. This is Bloomberg.
There is a way of building for the internet, building for the world that is trusted, that is open, that is inclusive of anyone who wants to participate.
MicroStrategy taking an impairment charge on its Bitcoin holdings. This after the SEC said companies need to follow some new accounting rules. Still, Michael Saylor's firm buying more Bitcoin. Here to talk about it all, Bloomberg's Sonali Basak. Sonali, take it away.
Yeah, absolutely, Emily. It's really interesting to see how MicroStrategy has ridden the ride that has been in Bitcoin in the past year. If you take a look at this chart, you see the ups and downs that Bitcoin has gone through, and just exactly where MicroStrategy has bought in at the average price of $48,710 last year. Of course, that has led to an impairment charge in the most recent quarter of $147 million here. But remember, these are accounting changes. You have investors that may or may not be comfortable with those swings. Some are more comfortable than others. MicroStrategy, as an investor in Bitcoin, did double down on that dip, bought Bitcoin about $10,000 lower at around $37,865 per coin. That's much closer to where it's trading now. That would still be a slight loss today, but again, let's see where it goes later on. If you look at what BTIG says about MicroStrategy's holdings, they think MicroStrategy, which has declined about 50% on the year, to $348, could eventually be about $950 per share. So getting comfortable with what it looks like to have the biggest corporate holding of Bitcoin, and starting to get comfortable with investors on what those impairment charges look like as they flow through the income statement.
Right, following, of course, Bitcoin's downward trend, at least for the last few months. Talk to us about the micro moves we're seeing from MicroStrategy's investors. How are they interpreting all of this?
It's interesting. It's, again, if you're comfortable with it or not. We saw when the SEC had announced that this change would happen, MicroStrategy did say that it would be noisy for investors to start to do this. But again, this is a volatile industry, a volatile asset class. And MicroStrategy, remember, the shares, that decline is much more steep than you see from its peer group. Perhaps in the Russell 5000, if you use that as a proxy, only 5% over the year. So a much steeper decline. But again, most of the analysts that do follow MicroStrategy do say that it's either a buy or hold, and that BTIG price target of $950 is the most aggressive that we see.
All right, Bloomberg's Sonali Basak, thanks so much for joining us. Now I want to bring in the man himself, MicroStrategy CEO and founder Michael Saylor. Michael, great to have you back with us. We're going to get to the investor question in a moment, but I actually want to start with software, because it was the best year for your software business, 2021, in a decade. And I wonder what that says about 2022. What is the outlook ahead?
I think we got a nice boost in 2021. Our cloud subscriptions business was up 39% year over year. Our top line was up 6% year over year. We had a big boost in free cash flow. We ran about an 18% free cash flow margin. So we generated a bit more than 90 million in free cash flow. We were able to invest that in acquiring more Bitcoin and easily cover our debt service. So we're comfortable with the business. It's nice.
So some of your margins did miss estimates due to wage inflation, investments in the cloud. Do you think these pressures will keep up in the near term?
There's some challenges with wages in the tech business, as you know, and yeah, we expect that'll continue. We'll have to just continue to get more efficient. Then if you're doing business internationally, international currencies, like the Argentine lira has lost the Argentine peso has lost 93% of its value over the last 4 years, Emily. Turkish lira is also struggling. The news last night was the Lebanese pound lost 93% of its value. So international currencies will be a bit of a weight, but our domestic business and Western European business looks good to us. And we're, again, as we rotate to the cloud, that's a nice efficiency gain for us.
So let's talk about investors. Why should investors buy into MicroStrategy rather than buying Bitcoin itself or some of the ETFs that now exist?
Well, if you had a spot Bitcoin ETF and you held the spot, but you charge 0% fees, that would be better. And MicroStrategy doesn't charge any fees. We're an operating company, and that means not only do we not charge fees, we make money and we can generate additional yield, and we can get fairly cheap leverage, like the $2.2 billion in debt that's got like a 1.5% interest cost for us. So your choices as an investor would be to buy into a non-existent spot ETF that charged you 50 to 100 basis points with no leverage and no yield, or to buy into the futures ETF, and that's much more expensive than 2 or 3%, or invest in Grayscale, which is a 2% cost per year. And so I think that, as an operating company, we're pretty compelling. Also, we're not a Bitcoin miner, so we don't take any Bitcoin mining risk. So if you're looking for a leveraged Bitcoin play with spot exposure that's got positive yield, then MicroStrategy is the only game in town.
Now, you bought about 660 additional Bitcoin during the dip, $25 million worth or so. That's actually your smallest purchase since last May. What should we read into this? Do you have plans to buy more, or are you hedging your bets?
And we did that out of free cash flow, Emily. So we didn't issue any debt and we didn't issue any equity to buy that. So that's a pure accretion to all of our common stock shareholders. And as I said, we generated about $90 million in free cash flow last year. So as we generate that cash flow, we'll pay our debt service, and then we'll sweep the remainder into Bitcoin, and we'll continue with that. If we're going to be more aggressive about buying Bitcoin, then we'll, look at various financing options. Probably the most compelling and interesting ones are to generate yield off of the 110,000 Bitcoin that's currently unpledged, or to borrow against that 110,000 Bitcoin and then reinvest that in more Bitcoin. We haven't made any decisions on that yet. We'll have to make sure that anything we do is accretive and meets our risk parameters.
You just held your big MicroStrategy World Conference. I believe 70,000 or so people tuned in. You interviewed Jack Dorsey, and of course, he rarely gives interviews. He had this to say about corporations considering getting into Bitcoin. Take a quick listen.
Even if you don't use or don't believe you could use Bitcoin in your company, I think it's worth your study, because there's a number of lessons in it that will make your company better. How you operate your company, how you interact with the world, how you think, how you execute. I've just learned so much from it that have made everything about my company and what we do much better. And if I were to start another company, those lessons would just be so great.
Michael, I'm curious if there's anywhere where you and Jack disagree on Bitcoin. What do you think you have to learn from each other?
We agree pretty enthusiastically. Jack's a man on a mission, and his view of Bitcoin and Lightning is they're open, they're fair, they're global, they're permissionless digital monetary networks. and you can use them to provide financial inclusion to billions of people. And you can actually do business at the speed of light, friction-free. And so as a technologist, he's a technologist, I am, we both agree on the idea of moving money at the speed of light to 8 billion people for free. And as a humanitarian, we both agree there's billions of people that are unbanked and not included in the current system. And, again, if your currency's collapsing and you just lost 93% of your wealth overnight and the bank seized all your assets, which is just what happened in Lebanon this week, what choice do you have? Like, there's billions of people that don't have any better alternative, and Jack wants to deliver a better alternative to them. And I agree with him wholeheartedly.
Dorsey threw some serious shade at Facebook and Mark Zuckerberg for the way they handled their big crypto bet diem, which of course hasn't worked out. We're also tracking Meta's results today, not looking good. Facebook, Meta, trying to make this big pivot to the metaverse that nobody knows whether it will pay off or not. You've seen so many big shifts in technology in your many decades in the industry, and I'm curious what your view is on what's happening over there.
Well, I think that Meta will figure it out. Mark Zuckerberg's brilliant, and I have the greatest respect for him. But what I'll say with regard to cryptocurrency is the world doesn't want a digital monetary network controlled by one company. It doesn't want a currency from one company. It doesn't matter whether you're the greatest company on earth. The beauty of Bitcoin is it's open, it's common property. Nobody controls it. Nobody 100 years from now will control it. And that makes it ethically sound. So I think Jack's frustration is he knows that Facebook and now Meta could deliver utilitarian economic empowerment to billions of people in an ethical, technically sound, politically sound, economically sound fashion. And he's frustrated to see that we all use our power as a force of good.
All right, MicroStrategy founder and CEO Michael Saylor, always good to have you here on the show. Thanks for taking the time to join us. Coming up, it's the name President Biden won't mention. More on his, let's call it a standoff, with Tesla and Elon Musk. That is next. This is Bloomberg.
We want to have a portfolio of EVs so everybody can truly make the transition. So we're just getting started.
I say climate change means jobs, and that's what you're proving.
And, we're so happy to support your agenda on climate change and getting to an all-EV future.
President Biden last week talking EVs with GM's Mary Barra and Ford's Jim Farley at an event at the White House, even tweeting about building the vehicles here in the United States. But the president failed to mention the biggest EV maker in the world. That's Tesla. And it certainly got the attention of CEO Elon Musk. Our Ed Ludlow here with more. Ed, do you think the president is deliberately leaving Tesla out of the conversation?
This is a tricky one, Em. I mean, look, it's actually quite clear. This is politics, and we're not a politics show, but Bloomberg's done some fantastic reporting around this. According to White House sources, Joe Biden's made no secret about his support from the unions, and he needs that union support. Michigan is a state where the Democratic Party can win. GM and Ford are legacy automakers with a long and rich history of union assembly workers, and Tesla's not. It pays its workers really well through equity compensation. But, Biden is clearly looking at this thinking, okay, I need the support of the traditional base that work at these companies. And that's kind of what we're hearing from the White House sources we're speaking to.
Well, he's certainly poking the bear a little bit. What do we know about the conversations between Elon Musk and President Biden? I mean, the president has invited a number of CEOs, continues to invite CEOs from Silicon Valley to the White House. And come to think of it, I've never seen Elon Musk there.
It is a cold shoulder, right? And, you just have to take the bigger picture. Tesla is the world's biggest EV maker. It's created thousands and thousands of jobs in the US. Yes, Tesla has moved to Texas, which is traditionally a Republican state. But it's really interesting that the White House doesn't acknowledge it. And as you know, Em, I mean, I was in LA last year listening to Elon Musk speak at Code Conference. He essentially accused Joe Biden of being a communist. And he called this the Russian EV revolution, which are pretty strong words. So it clearly grates him. And we get that from his most recent tweet as well.
All right, something we're going to continue to follow. Ed, thank you so much for taking time to break that all down. Our Ed Ludlow there in San Francisco. We'll be watching the tweets. All right, coming up tomorrow on Bloomberg Technology, we've got Alexis Ohanian, of course, the co-founder of Reddit, founder of the 776 Venture Investment Fund. We're going to talk about his latest crypto plays. Also, California Congressman Ro Khanna will be joining us to talk about his new book, Dignity in a Digital Age. And Hope Cochran, managing director of Madrona Venture Group, will be with us. So much to discuss. Big show. You don't want to miss it. I'm Emily Chang in Seattle. This is Bloomberg.